The war on Iran is bad news for the global economy.
So, what hit us? A supply shock that is large, with the world's daily oil flow cut by some 13% and its LNG flow by some 20%. It is global, with all of us now paying more for energy and with supply chains disrupted around the world.
But some countries are taking a harder hit than others, and the UK is among the worst affected. The International Monetary Fund has handed Britain the largest GDP downgrade of any G7 country. The IMF warns the UK is especially exposed because of its reliance on imported energy, including diesel, oil and gas. The IMF cut its UK growth forecast for this year to 0.8%, the sharpest downgrade among the G7. The UK is also forecast to have the joint highest inflation in the G7 this year at 3.2%. If the conflict doesn't drag on, the IMF predicts the UK economy will recover to 1.3% growth in 2027. The warning complicates the path for the Bank of England.
Inflation expectations have been slightly nudging up, not just at 1 year, but also 3 year, 5 year. And that's a sign that somehow households and firms in the UK are becoming maybe a little bit less certain that inflation will be coming down quickly. And so the path forward for the Bank of England should be to be very cautious in its easing trajectory and make sure that inflation is on the right track.
Before the Iran conflict, UK inflation had been easing. Now higher fuel and import costs are expected to reverse that trend. For the UK's Finance Minister Rachel Reeves, this Washington trip is no longer just about diplomacy. It's a test whether Britain can shield its economy from a war-driven shock and avoid becoming the G7's biggest casualty. Tulay Kalyon Haznedaroglu, TRT World, London.